10-year treasuries yielding 1.5%. There's no yield out there, people. There's none of it left. Where might we find some of it? Jack Hough from SmartMoney has some answers. And interesting thing is, it's not what you'd expect. The utility stocks that might yield 4%, the telecom stocks that's
you got to
yielding
think
pretty
dinky dividends.
Dinky
Everyone
dividends,
ignores
okay.
the dinky dividends.
Tell
No
us.
one sounds the rally horn on stocks that pay 0.8%, right? Because even that 10-year treasury, whose yield seems to be on its way to zero right now, even that'll pay you 1.6%, right? So there's a sharp imbalance right now between supply and demand when it comes to yield.
Right.
The baby boomers are retiring. Their percentage, the over 65% of the population is going to double over the next 20 years. And, you know, we've had core interest rates near zero since late 2008, so there's no yield out there.
Okay, so you went
So,
rifling through the bins, and here are your criteria
yeah,
we'll put on screen there.
Bank of America came out with a note a couple of days ago, and it said, look, high yield stocks have worked too well. You know, their high yield bunch is up over 18% last year, while the rest of the market was flat. They said it's time to make a move into companies with smaller dividend yields, but potential to increase payments.
Right.
And
so these are basically the stocks where the dividend stands to increase.
They look for
and this
stocks
is the
with much more
criteria
free cash flow than dividends, limited debt, that sort of thing. And the names, you want me to rattle off some of the names? I don't know.
I think people are trying to find some yield. So
yeah,
yes,
so they're pointing out companies. The highest yielder of the bunch pays 2.5%, and that's Colgate Palmolive. But there are other ones, Joy Global, a mining equipment stock that's 1.2% yield. Sherwin-Williams, 1.2%. Walt Disney, 1.3%. So the yields aren't exciting, but the key is this. These companies have potential to increase these dividend payments over time. Share prices tend to follow those dividend payments, those dividend increases higher if they materialize. And everyone's talking about the potential for a dividend tax increase after the end of this year.
It's certainly a big fear in the market right
That's
now.
a wild card. If that hurts high yielders, dinky dividends won't be hurt as badly. You'll be better off in them.
I don't know. I'd say if they had potential to grow, that they would have already. In this environment, it's going to be harder to hike a dividend.
They're stuffed with cash, so hopefully
they're going to be dinky and they're going to stay dinky.
We'll see.